Hi guys, Billy here from WB Trading, and in today's video I'm going to walk you through a high win rate divergence strategy that's not only pretty easy to trade and extremely profitable but you can also take it and begin trading it immediately, and better yet, it can be applied to all markets and all time frames too. If you'd like to learn the strategy, stay tuned. Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So today I want to walk you through a high win rate divergence strategy that I've traded with some really strong results in the past, and depending on how you choose to trade it in terms of target, it's a nice high win rate edge, and it's extremely versatile too, in that you can apply it to currencies, indexes, stocks and so on. So whatever instruments you prefer to trade, you can either use this strategy as a whole and add it to your strategy toolkit, or you can even take the entry trigger and apply it to an existing strategy that you might have too. In fact, I actually work with one trader who trades my DAX strategy and layers the divergence entry trigger on top for an additional confirmation, which is a really brilliant way of making use of what I'm going to share with you here today. And also, just before we dive in, I have to apologise about this. I've got a really sore throat today, but I promised to get this video up for you all this evening. I tweeted out yesterday just saying I'd have this up tomorrow evening. So I'm going to get this done anyway. Hopefully you can bear with my very croaky voice today. And yeah, with that said, let's get into it. So as with any edge or any strategy, there's always ways to build on it, to change it. So let me share the strategy with you, and again, you can either take this and use the strategy itself, or you can take the concept and perhaps even take it in another direction entirely, or even incorporate it into an existing way that you trade too. Now, before we actually dive in, one thing that I don't want to do here today is just hand over a set of rules, because as we all know, having strategy rules and nothing else, it's as good as useless. You know, if you learn just the rules for a strategy but nothing else about the strategy, it's like me sitting you down in a car when you've never driven before and just saying, look, that pedal means go forwards, that pedal is the brake, there's the steering wheel. You're as good as dead, aren't you? And similarly, you are never ever going to be able to trade a strategy profitably and consistently long term without all of the information on the strategy as a whole. So how it works, why it works best, the backtest data, the statistical information, and so on and so forth. In fact, for those of you that don't know this, as of January this year, I actually turned my strategy courses from the small ebooks that they used to be into seriously in-depth 3-hour video courses. And again, if all you did was watch the overview and rules video and you skipped everything else, well, there's just no way you're going to make money using the strategy. You need to know how I found the edge and actually built it. You need to see examples of the edge in play. You need to see the real-time examples of me actually deconstructing the individual parts of the strategy itself. You need to let me walk you through opportunities to increase risk reward, whether we should take every trade, and so on and so forth. Without all of that information, the strategy rules are absolutely, they're just useless. With all of that information, however, you know literally everything needed to trade profitably with a full understanding of every single thing that you're doing, and more importantly, why. And that level of confidence and a full understanding of the strategy is what results in the ability to trade profitably and, more importantly, consistently. So with that said, here's what we'll cover here today. So we'll start with exactly what a divergence actually is, how one works, and how to actually identify one too. Then we'll cover some examples so that we can actually identify one or two of these together. After that, we'll discuss risk reward and target placement. Then we'll cover the mechanical rules. Then we'll discuss carrying the edge across multiple time frames and into other markets. And then we'll again cover some examples to glue all of the above together and present some physical trade opportunities. And just before we dive in, obviously the information that I share with you here won't be anywhere near as detailed as what I share within the strategy courses that I offer, because again, there's only so much that I can fit into one YouTube video, whereas the courses for my other strategies, as you've just seen, go massively in depth across 3 sections and 3 hours of content. But with that said, I've done my best to pack as much information into this video as possible, and I'm hoping that it's going to add huge value for you all. So with that said, let's dive in, let's get started. So let's start from the top. What is a divergence? So for those that don't know this yet, a divergence is a disparity between price and a momentum oscillator like the MACD or the RSI, for example. And what we're looking for is a mismatch between these. So, for example, price heading higher and the momentum oscillator beginning to head lower, and vice versa. The purpose of identifying this disparity or this divergence between the two is to identify market turning points before we then execute and look to trade back upwards or downwards, depending on the direction of the divergence. So let's look at an example. Here we can see that the MACD indicator is beginning to back off, slow down and head downwards, whereas price is continuing to make new highs and head upwards. This is a divergence, and this suggests that price may be topping, or in other words, price may be about to begin also backing off before moving downwards. Let's look at another example. Here we can see that the MACD indicator is beginning to back off, slow down and head upwards, whereas price is continuing to make new lows and head downwards. Again, this is a divergence, and this suggests that price may be bottoming, or in other words, price may be about to begin also backing off before moving upwards. So now that you know what a divergence actually is, before we touch on the rules that will allow you to begin trading these, we need to discuss target placement. So as a quick refresher, when we identify a divergence, we're warned of a potential price reversal, and we want to execute and trade with the disparity between the momentum oscillator and price. But let's just say we spot a divergence, we get into a trade, where do we get out? That is, of course, where a target comes into play. Now, a target can be placed pretty much wherever you see fit, and before I let you know where I tend to place my own target when I actually take these trades, let me just add that for those of you who are more experienced traders, you can of course use a multitude of targets based on how you see the markets. So for example, you could trade back into a volume pocket using volume profile. You could trade back to a support or a resistance level. You could incorporate the entry into another strategy and use the other strategy's target, like the trader we discussed earlier who uses my DAX strategy and pairs the divergence with the entry before then trading back to my DAX strategy target, and so on and so forth. I, however, prefer to trade back to a mean price using a moving average, which in my case tends to be the 200-day exponential moving average. So I use this myself because it increases risk reward, and this in turn generates a slightly more significant edge, but using a larger target does, as we all know, reduce win rate. So with that in mind, instead of just copying me here and using a 200-day exponential moving average, you might choose a let's say 100-day or even a 50-day exponential moving average. Or of course, going back to what we've just discussed, you might have your own target to use as per another strategy or something similar. You really can do a lot with what I'm sharing here today, and I want to encourage you to take the divergence concept and use it in a way that suits you, your market view, how you trade. Or of course, you can just copy me, but the former would be my suggestion. Also, just very quickly, if you're enjoying the video today, it'd be really great if you take just a quick second to hit that thumbs up button. That'd really help me if that's okay with you. So let's discuss strategy rules so that you can take this away and apply the strategy and begin seeing results. For me, when I identify a divergence, let's focus on the 4-hour chart for this example. And what I look for is what I call a second wave divergence, which we identify using the MACD. And this has to pair with a new high if I'm looking to sell short, or of course a new low if I'm looking to get long. From there, I execute as soon as I see a 4-hour candle closed back below the high if I'm looking to sell short, or of course back above the low if I'm looking to get long. I then execute on the close of this candle with a stop loss below the low or above the high, and a target of, as I mentioned earlier, the 200-day exponential moving average. And again, the reason that I use the 200-day is because of the higher risk reward that this actually offers. I also do tend to favour the 4-hour and the daily timeframes when it comes to this strategy because they come with slightly less noise. With that said, again, you can carry this edge into all markets and across all timeframes too, and it does work well on, let's say, a 2-hour chart, a 1-hour chart, and lower as well. I think the lowest I've got myself has been H1. I think I've taken a couple of M30s actually too, thinking about it. But again, I do favour the 4-hour and the daily chart just because they're slightly more hands-off, and again, they come with a little bit less noise as well. So let's walk through an example of this strategy in use together. Here we can see that we have our second wave divergence paired with price making a new low, and if we then execute on the close of this with a target of the 200-day exponential moving average, as we can see, we then make our way to our target for a really strong winning trade. Let's look at another example together here, and again we can see that we have our second wave divergence paired with price making a new high, and if we then execute on the close of this with the target of, again, the 200-day exponential moving average, as we can see, we then make our way back to our target yet again for another really strong winning trade. So as you can see, it's a really simple and really effective edge to have within the toolkit, and it's even more effective when paired with an existing strategy too. As an additional I can't speak today. As an additional suggestion, you can also combine timeframes here too. So for example, you might have an entry signal presented via, let's say, the 4-hour chart, but you might choose to trade back to the daily chart 200-day exponential moving average to increase risk reward. You know, there's so many ways to apply this edge. It's a fantastic setup to have within the toolkit, really is. So there you go. You now know what a divergence is. I've walked you through how to identify these, exactly how I trade them, where I execute, where I place a stop loss on a target, and I've walked you through how edge is actually provided too. So take the concept away, have a look through the charts yourself, and you'll find that this is a really powerful little edge to have within the strategy toolkit. And you could even trade this alone and really focus in on this edge and make it your bread and butter, so to speak, too. And when you do begin seeing results using this, all I ask is that you give me a thank you in the comment section below the video. So hopefully this has added value for you all, hopefully it's triggered some inspiration, and hopefully you'll be able to take this away, get results using it, make some money, and it'll really benefit your trading going forward. Also, I'd love to hear from you in the comments section if you have enjoyed the video here today. Again, it'd be brilliant if you'd hit that thumbs up button for me if you would. I'll leave it there for today, and as always, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks everyone.